If you've ever thought about investing but felt overwhelmed or unsure where to start, this video is for you. Investing doesn't have to be complicated, and you don't need to be a financial expert to get started. In fact, with the right knowledge and a clear plan, anyone can begin building wealth through investments. Today, I'm going to break it all down for you, step by step. By the end of this video, you'll understand the basics of investing, the different types of investments available, and how to start with little money. Let's dive in. First, let's talk about why investing is so important. Simply put, investing is one of the best ways to grow your money over time. While saving money is essential, the interest rates on savings accounts are often too low to keep up with inflation. This means your money loses value over time if it's just sitting in a bank account. Investing, on the other hand, allows your money to work for you. Whether it's through stocks, bonds, real estate, or other assets, investing can help you build long-term wealth and achieve financial goals like buying a home, retiring comfortably, or even starting your own business. Now that you know why investing matters, let's talk about the different types of investments you can consider as a beginner. The most common options include stocks, bonds, mutual funds, ETFs, exchange-traded funds, and real estate. Stocks represent ownership in a company, and when the company does well, the value of your shares can increase. Bonds, on the other hand, are like loans you give to companies or governments, and in return, you earn interest over time. Mutual funds and ETFs are collections of stocks or bonds, making them a great way to diversify your portfolio without having to pick individual investments. Real estate involves buying property to generate rental income or sell for a profit later. Each of these options has its own risks and rewards, and I'll help you understand which might be the best fit for your goals. One of the biggest misconceptions about investing is that you need a lot of money to get started. That's simply not true. Thanks to modern technology and platforms, you can start investing with just a few dollars. For example, many apps and online brokers allow you to buy fractional shares of stocks or ETFs, meaning you can invest in companies like Apple or Amazon without needing to buy a full share. The key is to start small and stay consistent. Even if you can only invest $50 a month, over time, that money can grow significantly thanks to the power of compound interest. The earlier you start, the more time your money has to grow. Of course, investing isn't without risks. The value of your investments can go up and down, and there's always a chance you could lose money. That's why it's so important to educate yourself and make informed decisions. One of the best ways to reduce risk is through diversification, which means spreading your money across different types of investments. For example, instead of putting all your money into one stock, you could invest in a mix of stocks, bonds, and ETFs. This way, if one investment performs poorly, the others can help balance it out. Another important tip is to think long-term. The stock market can be volatile in the short term, but historically, it has always trended upward over the long term. So, don't panic if you see your investments dip, stay focused on your goals. Now, let's talk about how to actually get started. The first step is to set clear financial goals. Are you investing for retirement, a down payment on a house, or just to grow your wealth? Your goals will determine how much risk you're willing to take and what types of investments are best for you. Next, you'll need to open an investment account. This could be a brokerage account, a retirement account like an IRA or 401k, or even a robo-advisor account that manages your investments for you. Once your account is set up, you can start researching and choosing investments. If you're not sure where to start, index funds or ETFs that track the S&P 500 are great options for beginners because they offer instant diversification and have historically provided solid returns. Finally, let's address some common mistakes beginners make. One of the biggest mistakes is trying to time the market. Even experienced investors struggle to predict when the market will go up or down, so instead of trying to time it, focus on consistent, long-term investing. Another mistake is letting emotions drive your decisions. It's easy to get scared when the market drops or overly excited when it's booming, but emotional decisions can lead to poor outcomes. Stick to your plan and avoid making impulsive moves. Lastly, don't forget about fees. Some investment platforms and funds charge high fees that can eat into your returns over time. Always read the fine print and choose low-cost options whenever possible. By now, you should have a solid understanding of the basics of investing. Remember, the most important thing is to start. Even if it's with a small amount, taking that first step puts you on the path to financial growth and security. Over time, as you learn more and gain confidence, you can expand your portfolio and explore more advanced strategies. But for now, focus on the fundamentals, set clear goals, diversify your investments, and stay consistent. If you found this video helpful, don't forget to like, subscribe, and hit the bell icon so you don't miss future videos where I'll dive deeper into specific investment strategies and tips. And if you have any questions or want to share your own investing journey, leave a comment below. I'd love to hear from you. Thanks for watching, and remember, your financial future starts today. Let's grow together.